I'm Michelle Yu, and welcome to A View from the Floor here at the New York Stock Exchange for Asset TV. And I'm joined alongside a very special guest today, Matt Collins, Head of ETFs, Vice President at PGIM Investments. Matt, it's great to have you here. And I'd love to talk first about some strategies here to enhance income for higher, longer interest rate environments for investors.
Yeah, absolutely. And I think the hunt for yield is a perpetual decision point for all financial advisors, right? But the way we look at it is whether rates are at 0 or 5%, it's the same behavior. Everyone is looking for an incremental yield over cash, and they want to do it in a very risk averse way. And I think if you look at interest rates, anything above 2%, 2.5%, absolutely changes sort of the fundamental makeup of a portfolio, right? As you look for yield. But whether it's at 5 or 0, they're still looking for safety and about 50 basis points or so over that money market yield. And that's a timeless decision point for an FA.
Can you give us a little bit insight of shorter duration ETFs in risk and return amidst a market volatility?
So everyone's hunting for income, right? If I look at the most flows going to each segment of the market, it tends to be income, even in the equity market, whether it's high yield, short duration. The issue the FAs are challenged with is, does the risk of that strategy overwhelm the income you're trying to achieve, right? Oh, great, 6%. But if the capital appreciation sort of knocks that down to a level, you have to be really smart and tight with where you seek income. And the most popular investments in the market are to ultra short ETFs and to AAA CLO ETFs, because they are offering a really attractive risk return profile where the income is not overwhelmed by the capital risk.
You mentioned CLOs. Why are they so popular today? Why is this something that people are really looking into?
So I've been doing ETFs for almost 20 years. I've never seen so much interest go to a category so quickly as it has to AAA CLOs. It is a category that a lot of people hadn't heard of 2 years ago, but it's $1 trillion market. The issue is, about 3 years ago, only institutions and banks and insurance companies had access to CLOs. Bring in an exchange traded fund on a AAA CLO ETF, all of a sudden 25 billion goes to it because it offers one of the most attractive risk return, solid income relative to risk that you can get in the market. And all of a sudden, the people are reassessing their entire portfolio, right? We've historically, in our multi-sector portfolios across PGIM, have allocated anywhere from 15 to 20% of our fixed income portfolios to AAA CLOs because it's a really attractive risk return profile.
But what makes it so attractive right now, presently, you think?
I think it's the stability of the NAV, but a yield of anywhere from about 130 to 150 basis points over cash. That's where the scales tip for a lot of investors. They're on the fence at 30, 50 basis points over money market. You go north of 100 basis points, money moves when you can get income at a risk return profile that's attractive.
Matt Collins, thank you so much for your input on ETFs. As always, great to have you here at the New York Stock Exchange. And that'll do it for us here on Asset TV. I'm Michelle Yu. See you next time.